To get some more insight, let's bring in Bitcoin Foundation Chairman Brock Pierce. Brock, it's always great to see you and to have you to talk about a story like this. Kelly brings up a great point. Part of the allure of crypto is the secrecy aspect of it and that element of it. But then something like this happens and investors sit back and say, maybe we do need some more regulation. I mean, how is it, possible for Sam Bankman-Fried to be able to do what he did without and leverage the company and investors in this way without anybody being wise to it?
Well, I think the big thing here is he wasn't using at the core of his business the tools that make cryptocurrency possible, the things that make systems transparent. He's really a Web 2 company facilitating transactions for Web 3 or cryptocurrencies. And I think one of the things we need to see here is that migration to really eating our own dog food. Enough of this Web 2, time for Web 3, real decentralized systems with absolute transparency, automated market makers, all of that. And for those businesses that are still Web 2 like his was, I think we do need regulation. I think we need to know that they are not, commingling customer funds, not leveraging customer funds. At this point, this is, as was stated, the biggest, most negative event we've seen. And every day a new shoe seems to drop. Other counterparties are imploding as a result of what happened here. I would as well compare them to Enron.
Right. And then we've got the news of this $477 million hack. In your view, how does that play into the chain of events here?
Another one of these, bombshells that seem to be dropping every day. It's like just when you think this can't get worse, oh, look, they've done another thing that is incredibly alarming. I mean, how, when you're filing for bankruptcy, do hundreds of millions of dollars or $1 billion or $2 billion disappear? Yeah. Is it an inside job? It's terrible, terrible, terrible. The impact it's having on retail, the impact it's going to have on sentiment long term. This also, as a contagion, has gotten out to the institutional side of the industry. And this is after you have Sequoia and many of the most reputable firms in the world that invested in this company, that did due diligence on this company. It reminds me a little bit of the Bernie Madoff story. Did everyone just trust the person that did diligence before them? How did everyone get bamboozled here?
Yeah, that's a great question. And when you compare it to Bernie Madoff and his Ponzi scheme or the collapse of Enron, for example, I thought there would be a broader, more impactful market reaction. Sam Bankman-Fried is in the Bahamas. A lot of questions are being asked right now. And you're right, amongst the institutions, these are the conversations that are being had on Wall Street. I'm a little bit surprised by that the reaction hasn't been as severe as in those previous cases that we mentioned.
Well, I can tell you from within the cryptocurrency industry, it is severe. I mean, right now you've got people saying get all your money out of every exchange, every DeFi tool, not your keys, not your coins. And so we're effectively seeing a mass run across the entire bank of exchanges and industry services. And what's sad about that is some of the really good companies that have been behaving the right way may end up becoming victims as a result of this broader, call it, run. And again, I hope that is to Web3 decentralized exchanges. I hope that it means that, by the way, it's going to be good for the United States in the long run. I think companies that have licenses in less reputable jurisdictions people just aren't going to trust it. And I think a lot of people are going to be like, I want my money in a U.S. exchange because at least there I know the U.S. regulators are looking over these businesses and ensuring that those customer balances are there, that the reserves are there, that they're mingling money and they're not leveraging against those resources, putting customer funds at risk. This could end up being a great opportunity for the U.S. and its relevancy in this fourth industrial revolution.
So I think that's a great point. I'm not in any way dismissing what has happened here and the wealth, the amount of wealth that has been lost as a result of it. But some have said this is probably, in some ways, although, again, horrible situation, a natural step in sort of the consolidation. There were many, many players in the field. And so this industry, even if it's not completely regulated and specifically by Washington, for example, that the more reputable players will be the ones that shine.
Yeah, this is a terrible event for crypto in the short and probably medium term. But in the long run, this is a good thing. We want bad actors out of the way. We want people that don't know how to manage risk out of the way.
Yeah.
In the long run, this does not change my view on the sector and the role that it's going to play in our future. But in the short term, there is no question these are very dark days for crypto, very painful for all of us in the market, whether you're retail or institution. But as we like to say, hold along.
Yeah, and we had the board up before. Crypto across the board down, seeing losses as a result of this. But I will point out, Brock, that as we're speaking, the Dow is at session highs. So, we'll see how this shakes out into the broader markets. But always great to see you. Thank you.